Hi friends, how are you? Hope you're all fine. Today we want to discuss about stock market. Now we all know about Bombay Sensex, Dow Jones, Nasdaq, Wall Street, etc. But a lot of people don't invest. Actually, stock market is called golden gate. We all, most of us, not all, we are born poor, but we cannot remain poor all of our life. We should try to die rich. And how that will happen? That can happen via stock market. Stock market gives an enormous opportunity to create wealth. So, but a lot of people do not understand the complexities of stock market, though it's very simple in many ways, provided you know about it. So we discuss some outlines of stock market and Asian stock market mainly because Asia is the future. First, let's talk about Nikkei stock market. Japanese stock market Nikkei 225 index. This is called Nikkei stock average. It's managed by Nikkei Keizai Shimbun. It's a newspaper. And is also called Nikkei Heiken Kabuka. We all follow that in the morning. We also try to know about Shanghai stock market. That's a dichotomy. Shanghai stock market is a Chinese stock market based in Shanghai. There are three stock markets in China, Shenzhen and Hong Kong. Except Hong Kong, Shanghai is controlled by and regulated by Chinese Communist Party and it's manipulated. So it may not be, a lot of people try that in China. They don't try that as casino. But stock market is not a race course. Stock market is for long-term investment. But China, you see, they talk about socialism, communism, Marxism, Leninism. But capital is headed. But yet they have a stock market. What a dichotomy. I am not very fond of Chinese stock market. It's highly government controlled. I would prefer to study Japanese stock market and Japanese companies because it is more transparent, trustworthy. Why you want to go to stock market? Because we want to buy some part of the business. We must understand what is stock market and why we should be there. Because somebody is telling we must not enter into stock market. We must gather lots of information before entering into any market. Because any business or entrepreneurship is a risk. Some risks are big, some risks are small. And how we manage risk, that's an important thing. How we perceive risk, how we understand risk. So that is also important thing. But in reality, if people know something, there's not much chance to lose money in stock market. It's almost impossible. 99% people do not lose stock market, provided they understand the market, have basic information, and after that they enter. Not because someone is telling, go and I'm not doing anything, let's do it. That's not the way. See, there is a saying in America that if you put many candles for a dead horse, it will not run for you and win races. If you buy bad stocks, whatever you do, how much knowledge you have, it will not work. You have to buy good stocks only, good companies. And my suggestion is stay invested long time. Money doesn't make money all the time. Time does. When I started doing that, we had not much information. And it's not like today we had a tutor to understand stock market. We had to burn our finger and enter. But I'm happy I was in stock market for a while. And I have a friend, his name is Mr. Bhattacharya. He's a great man. And he's an engineer. However, his idea and his strategy in stock market baffled me a bit. He's invested in stocks like some Indian companies, very famous Indian companies, and this chap is, I don't want to mention his name. It's a Fortune 500 billionaire. You must be knowing who I'm talking about. So he said, my friend Bhattacharya said, look, this company will go up and up and up. I said, man, look, if this chap is cheating everybody, why he will not cheat you? You're not his son-in-law. That happened. However, he had other stocks and he did it well. Wish he should have listened to me. Anyway, let me explain some basic fundamentals of stock market. It's for the beginners, and for the people, those who do not understand much about market, they should try the market. Because India is growing at a very fast pace. It would reach 5 trillion economy. You don't have to be very brilliant to make reasonable money in stock market if you stay invested for a long time. Some people would, in previous time, what you used to see that some people will go and buy stocks and just sell in same day. That's not the way. You don't indulge in daily trading. My advice is that daily trading is not a good idea. 98% people lose money there. So, better thing is to be invested, take delivery, old style, and stay invested for a long time and buy only good stocks. You must understand the business. For example, I didn't understand pharma. My background is history. So I never tried pharma. I tried mainly FMCGs, defense stock. Some people, of course, I invested, take stock. And I'm happy. Though pharma made very brilliant leads in these days, continue to do that, biotechnology, etc., etc. Coming, new economies coming, and quantum in IT sector, AI, e-commerce, etc., etc. I did not, unless I understand that business very well, I never try that. I bought FMCG stocks long time ago. And I used to go to local grocery shop, small shops, I have to see if they have stock, if their product is any company XYZ product is stored there. What is the demand? It's a small thing. It's not a very big thing. You can do that in your shop, nearby shop. You can go and find out what kind of whatever is your expertise. I don't have much expertise, technical expertise to understand, you know, high-end things, very basic things. So, like I Colgate toothpaste, toothbrush, Hindustan Liver Brothers products like everyday use. In morning we are using that. We are like Nestle, this kind of things. So my suggestion is only buy stocks you understand. Do not buy stocks you don't understand. Very don't make it complex. You know, people will talk about fundamentals, technicals. I don't believe in technical. Candles. I am not fond of those kind of things. I You should try to understand the business first. Does it sell? Does it sell? Product, how is the product? Do you like the product? Do you trust the management? Most important thing. Because business is trust. If you don't trust the management, like if they have no track record, like my friend Mr. Bhattacharya did, bought from bought stocks of a famous company, so-called famous company, whose management did not provide much support to the shareholders. I would prefer not to buy. And he understood that, though late. What is how you become successful in stock market? Because you enter quickly as you are young. But that doesn't mean if you are not young, you cannot enter. We have seen some famous boxers at the very end of their life fighting for the world championship. Why? Because you can start out anytime you like. It's good for the ladies, housewives. They are doing a lot of investment because they have a lot of time to research. You see, a lot of people think we'll do big jobs and make a huge amount in stock market. Unless you have little time, then it's pretty difficult. Then you should go to mutual fund. That route is good. However, anybody who has bought a stock, good stock, price is not the important thing. Price, you should add the future value. Think of the future valuation. Don't think of price. Think of valuation. So, okay, few words you should learn like PE ratio, return of investment, and return on equity. These kind of things, very easy. You can Google it. You can find it out. You can see the balance sheet, cash flow statement, sales, net profit. These are the things any company, you can go to any channel or any website, you can find out just easily. You can Google it and find out. Before doing that, do little research and then you enter in stock market. Without preparation, never do anything. Not anything in life, and stock market especially, because erosion of fund is a very dangerous thing. It can happen. So I'm telling you some basic points here. You should invest early and remain in stock market. Sometimes you see market are down, people are not going in the future. That's the best time. That's the best time to enter in the stock market when people are not going. You find out from the history. that stock market has always rebounded unless there is a atomic war or asteroid coming from the outer space, something like that, where, by which dinosaurs got killed. That kind of event happening, stock market isn't going to stop. So these are the things you should take a little risk in life, make a portfolio. That means don't keep all your eggs in one. Don't buy only one stock. Though Warren Buffett said, win big. However, I like Warren Buffett. He's guru of every investor. But I like Indian stock tycoons. They are great. They are really great. I admire them. They were nobodies. They became someone. Rakesh Jhunjhunwala, Ramdev Agarwal. See, they were nobodies. They became big. So, Indians have a lot of brains. Of course, Warren Buffett, salute to him. I like him. I take clues for him, from him. But I'm impressed by Indian investors. Very, very impressed. In one life, they've transformed not only themselves, but others. You see, you have how to others to aspire to become rich, to become successful. So my suggestion is buy only good stock, blue chip stocks. Could be expensive. Buy one stock, buy two stocks, three stocks. Systematic investment plan. There is SIP that they call. Buy two stocks every month. Don't buy all the stocks in one time. Some people are saying, hey, buy this stock. This is very cheap. Don't buy penny stock. Buy good stocks. Protect your money first. You lose money, it's very painful. So I'm going to tell you one may invest. What are the investment strategies? One can invest in real estate, gold, jewelry, commodities. These are the investment avenues. And of course, stock market, the financial assets, fixed deposits, insurance, provident fund, pension fund, etc. You know, but today, if you see bank interest rate is very sad things. 4%, 5% interest. What do you do? Why should you do that? You buy gold, it's an idle investment. Very idle investment. You go to a pawn shop, if you need money, they'll not give you a lot of money. So gold is not a good investment. A lot of people buy gold. Stocks are good investment because anytime you can sell it. And it has liquidity. You buy a real estate, you cannot sell it whenever you like. Tomorrow you don't want it, you don't want to come out. It happens. Some people say, no, I don't want it. But you have to wait 1 or 2 years, you have to beg others, buy my house, buy my this and that. In stock market, that doesn't happen. So, there are savings bank accounts. These are short-term things that you keep money in the bank. Money market, you go, you daily trading. That called short-term kind of thing. Long-term fixed deposit, public provident fund, bonds, mutual funds, stock market, etc. Stock market is always there. You can earn, you should be reasonable. You should not think about I shall make 300%, 200%. No, that's not gambling. You should think about 17%, 18%. Be happy. Plus, they will be getting dividend. Every company is paying dividend. So, I'm giving you one example. I bought a company called TCS, Tata Consultancy Service. So, I paid that amount some years ago. I got 2 times bonus stocks. Every year, 4 times I'm getting dividend. So, the money I invested, that's almost I recovered. I'm totally sitting on profit. So there are two types of in the background of stock market. We should talk about primary market and secondary market. Primary market, what is primary market and what is secondary market? I think one should know it. Primary market is IPO, where companies are floating stocks to raise funds. It could be discounted, we added premium, or it could be face value. That is called primary market. Then comes secondary market. That's the real market. It's where listed stocks are traded. And so you can buy and sell stocks. You can tell your broker. There are a lot of good brokers today. Today, there's a thing called SEBI registered brokers. So you only go, or there are small banks, big banks. You can open account there, own them. Just own them. Buy this stock for me. If you have the account, if you have money in your account, small money. In America, look, India has so much opportunity. I must say, it's a paradise. It's a paradise, I must say. In America, one stock, two stock brokers will not buy. But in India, you can buy any company. One stock, they will buy. Big broker banks. You can buy one stock. America, maybe they'll be hesitant. No, one stock, this. And American market, even Japanese market, they're saturated market. You might not get that kind of return as Warren Buffett got 50, 60 years ago. In India, you can become rich. India, you can do miracle. Besides, Indians are, despite of a lot of discrepancies, mostly Indians are entrepreneurial. Sorry. So, except few flagships, like some people are negative, they will not do anything in their life. Or they are not doing anything, so they are entering stock market. But you have to have aspiration. You must believe yourself. You must believe. You must have a dream that I can do it. You must have preparation. There are a lot of universities and other places that's teaching you stock market, like Calcutta St. Xavier's. There's this course in stock market. Or if you don't have anything, you can learn from internet. Or you can go to American Central Library or National Library, free. Spend every day 1-2 hours. Don't waste your time. And there is a saying, when you don't have money, don't brood and be frustrated. Go to a library, elevate yourself, gather information. Information is money. Time is money. If you have a lot of information, you don't have to have knowledge. Knowledge is a different dimension. Just collect information about stock. Free books are there. Free. Study them. Study those books. Spend 1 year, 6 months, 3 months. Go every day. It's free. Just go there. So I'm talking about some glossaries. What is bull market? So India has gone through bull market. Bull market is a market when market is up, everybody's rebellion. Bear market, this is called bear market. Bear market means it's down, nose diving, it's not a bad thing. You can buy. Don't be hesitant challenging the bear market. Buy. Keep your money, some money. Don't invest all your money. See, there is a thing called portfolio management. You don't keep all your money in stock market. Keep some money in. If you're young, keep some money in, more money in stock market. Some money in you'll be needing every day. So you keep in bank, like you have other assets. So these are the things, you see. Uh, but you enter the stock market, discuss stock market, make everybody in your family familiar with stock market. Discuss that. We discuss a lot of bullshit. Say, who is doing this? Who is doing that? What's the problem? Do you make money? This man has done this. This man is doing this and that. But one thing I say: see games, sports, little bit, cheer yourself. And if you have a girlfriend or boyfriend, have some good time. That will cheer you, keep you fresh. But your focus, you must have a focus, tunnel vision that I will make money from stock market. Think about it all the time. Discuss with your girlfriend or boyfriend, whichever is suitable in that point of time. About business, stock market. You are earning a lot of money, or cost less money from your salaried job or your other businesses. So you can take out some money, invest. See how many people are not invested in the stock market. There are so many people do not know. And don't try to gamble. Please. Don't gamble. It's not the fault of stock market. See, if you drive a car 200 miles per hour and you crash somewhere, it's not the car's fault, it's your fault. You cannot blame stock market for that. You must have self-control a little bit. Greed is a dangerous thing. And it's like sheep. Sheep have a hard mentality. People are greedy, they jump on. That should not be done. You must have your own decision. You must have purpose. So what is there's thing called delivery, old style. You buy a stock, take delivery in India, T plus 2 months. It means trade plus 2 days. And it's called intraday. Buy one stock the same day and sell it. Today, you don't keep stocks in physical form. That's a very good thing. There's a depository, government depository, government regulated depository. This is called dematerialization or demat. So there's a thing called stop loss. These are for the daily traders. And, if you're buying in, for example, $50, you put a stop loss in 48 rupees so that you don't lose a lot of money. Otherwise, it slides down. That's applicable mostly in daily trade. I'm not in favor of daily trade. I don't like it. Today, a lot of people are using software, etc., etc. But I am not. This is not good for. This not. That doesn't help. You see, ask a lot of big guys in stock market, Ramdev Agarwal, Junjunwal, Rakesh Junjunwal. They will not say no. Don't do this. That's not the way. What you can do is called a swing trade. What does swing trade means? Swing trade means you buy a stock and then after 6-7 months it goes, or whenever it goes up, you can sell it. And you can come out and buy another stock. You can change stock portfolio. That is a good thing. But the same day you buy, after 20 minutes it will go up. This is a very, very stupid concept. That is called future and option, where you are renting a stock, and it's very risky. I don't. Of course, I'll discuss some other time this risk management, etc. Basic thing is that you take risk, you can manage. Don't take high risk. Take risk, you can manage. If you have a slab, you can come out and give another slab. So keep time. If you're alive, you have a lot of time. But if you're smashed, don't do this kind of crazy things. I will also say you can, it's called hedging. A lot of Americans don't understand hedging. People are, today you go to some university kid sitting in a bank platform, hey man, why you not doing a date and hedging? It's not so easy. I was seeing on Marwadi man, though I don't do daily trade. He doesn't didn't understand he was doing hedging. He bought 50 stocks or 20 stocks, all 2, 2, 3, 5, 1, 2, 3, 5. So I realize he's hedging. You see, so he can make profit. Maybe I don't recommend that at all. Maybe he can make in 20 stocks, let's say 20 stocks or 10 stocks, 5 stocks. He can make profit 2 rupees, 3 rupees, 5 rupees, whatever it is. And 4 stocks he will not make. That is also hedging. There are many types of hedging. You see, don't do this. Simple, old style. This here comes Warren Buffett. Here I follow him. Warren Buffett said he does only old style delivery kind of thing. Buy thing, get invested, keep invested. You will make money. It's not a caliber. It's the caliber of the entire economy. You see, I'm telling this because India is doing well. Indian economy is going at a zoom speed. And what do we say? We say, sit idle and see, oh my God, what will happen, what will not happen. Be part to it. Should be party to that. Then comes averaging. That's a good plan. See, if you bought a stock at, say, 10 bucks, you believe its stock will go up. You have researched about the stock for a very long time. So it came down at 7 rupees. You can buy. So you can average your price. It's a technique. You can try that. Then rights issue. The companies issue sometimes need money, so they give shareholders at a discount rate stocks offer. Say for example 75 rupees the stock price is quoting, so they give you a 35 rupees. I'm giving you an example. Hitachi Home, there's a company called Hitachi Home. Now it's called Johnson's Control. It used to be 17 rupees. Now it is 2,500 rupees or 2,280 rupees, something like that. They gave a rights issue. I remember that time it was quoting 500, 400, 500 rupees, and they gave it 200 rupees or something like that. That's for example I'm saying. So you can make a lot of money. It's called stock split. Here also you make profit. Say this face value is 110 rupees. So they make it 1 rupee face value. So you have, for example, you had 100 stock, it became 1,000 stocks. So you get more dividend, and a lot of people can enter in the stock. Say like a lot of big companies do that, like Colgate, Hindustan Lever, ITC, TCS, Infosys. They will do that. After splitting the stock, they become little. Say it used to be 10,000 rupees. Now it be say for example, Infosys became 10,000. It became get bonus and the stock split. Imagine the profit after 20 years, 15 years. There are bad companies. You'll never see them after 1 or 2 years. A lot of fanfares will come out, say, open an IPO. Don't buy them. You must be very sure about those companies. Look, only buy good companies. There is no democracy in stock market. All stocks will not do well. Only good stocks will do better and better. Bad stocks will never perform. So if you think all stocks will, no, that will not happen. If you don't have that much of time to understand that, you don't invest your money there. And bonus stocks. Bonus stocks means, see, if you are holding one stock, company decided to make profit and wanted to share their profit with, apart from dividend, they want to share profit with you, and they gave you one 1:1 bonus or 5:1 bonus. So you make a lot of profit. Your stock holding goes up. These are the things I wanted to discuss. I will make a lot of mainly Japanese stock market, Indian stock market, American stock market, mainly Indian stock market companies. I'll make episode. Hope you like my presentation. Thank you very much. So kind of you. Enjoy your day. Invest in stocks. Be happy. Thank you very much.